welcome. You're watching Editor's Take on Moneycontrol. I'm Sakshi Batra, and with me is Gaurav Choudhury. He's the Deputy Executive Editor of Moneycontrol, and we are here to discuss about the escalating US-Iran tensions and the impact on India. Thanks a lot, Gaurav, for joining in. Let's start off with the first immediate impact that we've already seen on the markets. Not just India, but global markets have felt the jitters of these escalating tensions. And after the knee-jerk reaction that we actually saw on Friday's trading session, there was a bit of recovery towards the end. But today, there has been a free fall on the Sensex, 800 points down. Nifty has slipped below 12,000 levels as well. So is this going to continue? Are there scenes or are there any kind of indications about abating of these tensions?
So today's fall and today's reactions in both the currency market and as well as stock markets is pretty much an expected line, and everybody expected, because we have to put this in, just to put things in context. The impact on India is primarily because of rising oil prices, and that's a significant factor that brings into play, because rising oil prices means our import bill goes up, and if our import bill goes up, the rupee falls, and when the rupee falls, there are various kinds of implications that come about. So any kind of tension in West Asia that does have an impact on oil prices will always necessarily have an impact on Indian markets, and which can play out in the real economy through multiple pain points, and that is what seems to be playing out now. Having said that, what we have been told is that the government is in a wait and watch mode, and if the tensions cool off a bit over the next couple of days or weeks, the government is not really worried. So the government is. I don't expect either the government or the RBI to bring in some. Come out with some knee-jerk measures yet. They're going to wait and watch. The key thing to watch out for here is how, more than the markets, the key thing to watch out for here is how the currency market behaves. And if the rupee gets into a free fall, then it could be a big cause for concern.
Right. I'll ask you about the rupee, but the first thing that you mentioned was the crude oil prices. That is a bigger worry for us as well, since we are an oil importing nation. And $70 has also been breached on the Brent on the upside, and this is for the first time that we've seen in the last 9 months as well. A 2% spike just in today's day. So, what does it mean for India's imports already? What is the state of the import bill right now, and what do we look forward to now?
So this is clearly something that the government would not have factored in, and would not have anticipated that this would play out. Now, the good thing is that it comes, the only silver lining here, it comes during the fag end of the financial year. For the better part of this financial year, oil prices have been relatively stable, and also towards the lower part of the range. But if it now goes beyond, say $80 a barrel, the government obviously would have some threshold in mind. And if it goes beyond that threshold, it would be very interesting to see what kind of a oil price the government factors in while presenting the budget on February 1 this year. That is going to be very it's going to be a very important variable that needs to be watched out so far as India's fiscal policy projections are concerned, and also from a purely consumer's point of view. Higher crude oil prices means higher petrol and diesel prices. So your cost of transportation goes up, your commuting cost goes up, and then it also plays into it. It has a very strong inflationary impulses. So cost of moving goods from point A to point B goes up. So when you're ferrying goods, say when you're ferrying vegetables or anything or any essentials from one part of the country to another part of the country, that cost goes up, and that transportation cost goes up. It finds its way into higher retail prices, and that could be inflationary. So if oil prices continue to persist at a higher level, or if it continues to rise, then I would assume that the days of very benign retail inflation are over, at least for the next couple of months. But clearly there's a big if here if oil prices continue to rise or remain at very high levels, and that would mean that interest rates are unlikely to be cut.
All right.
Inflation rates
okay. And also about the rupee, now that you said that, today again we have seen a depreciation where the rupee has now breached 72 against the dollar as well. So what does this really mean, and will it upset the fiscal math of the government as well?
So clearly the current account deficit will now have, it will have implications for the current account deficit because our import bill goes up. But more than that, if the rupee continues to fall and continues to weaken, everything that is imported becomes costlier. So it has an immediate impact on inflation as well. And also, for instance, if you're traveling out, your cost goes up. Your traveling out cost goes up. Everything that is imported, like oil is one part of it, but There are also a large number of things in a daily use that we import, mobile phones, for instance, computers, for instance. All the prices of all these goods that are imported goes up, and that is something that is going to be felt by the households almost immediately.
Right, but do you think that the government already is facing a bit of trouble, meeting the fiscal deficit target
Yes.
of 3.3%
Yes.
in the budget? Do you think this will again make things worse?
So what it does is that it presents it presents the risk of the government again confronting a challenge of the twin deficits, as they are called, the current account deficit and the fiscal deficit. The current account deficit has been very low and within very ensconced within very comfortable limits, primarily because the oil prices have been stable and low and towards the lower range. If oil price start going up and the rupee starts to fall, then the government will be presented with this twin deficit challenge. Fiscal deficit, clearly, there are expectations that the government will not be able to meet its fiscal deficit target for 1920, and in fact would peg the fiscal deficit for 2021 at a higher range. Along with that, if a higher current account deficit has to be maintained, and if the current account deficit has to be contained, that is going to pose a fresh set of challenges.
Absolutely. Thanks a lot, then, Gaurav, for sharing all that insight. Well, the current situation is not very welcome because we can see the twin deficit problem again emerge for the government right before the union budget as well. So this is coming towards the end of the financial year, and this could also pose trouble, as far as the fiscal math for the government is also concerned. But we'll have to wait and watch out for us to see how things really pan out on the global front. Thanks a lot for joining us in this edition of Editor's Take, and do stay logged on to moneycontrol.com for more news and updates. Thanks for watching.